Hi everyone and welcome back. Today we're going to discuss the Brookfield India Real Estate Trust IPO, which just concluded this week. This will be the third REIT to get listed on Indian markets, following up the Mindspace and Embassy REITs that are already listed today. Today we're going to discuss some basic details about this REIT, the assets that this REIT contains, a little bit about the financials, and finally how one can buy units in this REIT. REITs are financial products similar to mutual funds that allow investors to buy shares in portfolios of rent-earning properties that they would not be able to invest in otherwise. This portfolio of rent-earning real estate assets is handled by an independent trust and then listed onto a stock market. This trust handles the operations of these properties on behalf of investors, including finding tenants, signing contracts with them, and even works to expand this rent-earning portfolio. These REITs are mandated by SEBI to distribute a large portion of their rental income as dividends. So the investor can benefit in two ways: through price appreciation of the stock and also the dividend. Alright, so let's discuss the Brookfield REIT and the IPO that just concluded this week. This REIT is backed by Brookfield Asset Management, which is a Canada-based firm with properties and assets all over the world. Brookfield's presence has been growing in Indian real estate over the last 5 years quite steadily, and they have made a number of notable acquisitions. Over the last 5 years, they have acquired assets from Hiranandani Group, Leela Hotels, and even the RMZ Group in Bangalore, which became one of the largest acquisitions in Indian real estate. Let's go over some basic details about this IPO. The window for application started on 3rd Feb and closes today on the 5th of Feb. The price band for purchasing these shares is 274 to 275 rupees. Given the minimum lot size of 200 units, the minimum investment for this IPO would be around 55,000 rupees. As of the final day of applications, this REIT is now subscribed 4.8 times. Now let's discuss the assets that are contained within this REIT. This REIT will contain a portfolio of 14 million square feet of office space with rights and options to acquire an additional 15 million square feet over time. This REIT contains 4 large campus format office parks in Mumbai, Noida, Gurgaon and Kolkata. In terms of tenants, 75% of their gross contracted rentals are from large blue chip companies such as Barclays, Bank of America, TCS and Cognizant. Further, these tenants have long contracts with the weighted average lease expiry being 7.1 years. While commercial office spaces were severely impacted through work from home, Brookfield's management suggests that they are now seeing their numbers come back to normal. Further, their rent collection through the pandemic has been above 98%. So let's quickly go over some points raised by analysts about the financials of this REIT. Based on the filing documents, analysts note that this REIT did not make a profit in the last year and is looking to ramp up its dividends to 7.5% by financial year 23. Reports also suggest that their plan to pay out a 7.5% dividend by FY23 might also be difficult to achieve. Given the breakup of this REIT and the 4 large office parks it contains, questions have been raised about how concentrated their revenue is. An angel broking report cites this as a concern, stating that their revenues are highly concentrated on the Gurgaon market, with 42% of the rents coming from one of these large office park campuses in Gurgaon. In terms of valuations, given that this REIT contains physical assets, a lot of analysts use the metric of net asset value or NAV per share to find some sort of valuation for these REITs. Given the price bands for the IPO, this REIT has been priced at about 88% of the NAV per share. Some analysts suggest that given the fact that they did not make a profit last year, this pricing relative to the NAV is a bit aggressive. In terms of dividends, a Share Khan report suggests that at the IPO price of Rs 275, the pre-tax yield for the next year will be 7.95%. However, they also note that the interest component of this payout, which is taxable, will be higher than the dividend component. This would reduce the post-tax yield. It is important to note that this REIT is a bit different from the 2 others listed on the market currently, given that it is a fund that has put this diversified portfolio together instead of a developer listing their own inventory. Going forward, this could be a way for developers who cannot put together an entire REIT portfolio to monetize their assets. The Brookfield management also states that there is a growing acceptance of commercial real estate as an asset class both for institutional and retail investors as this space continues to develop. With an amendment earlier in 2020, the government gave these REITs the option to opt for a lower corporate tax rate, which would make the dividends taxable in the hands of unit holders. However, most of the REITs, including Brookfield, have chosen to opt for the higher tax slab, which would make their dividends tax-free in the hands of unit holders. Finally, let's talk about how one can buy units in these REITs. Since they are listed on the stock market, you will need a demat or trading account to purchase any of these units. Once you have set them up, you can use your trading app or console to look up the names of these REITs and you will have the option to buy them. As you can see, once you click to purchase units in this REIT, it shows the minimum lot size as 200. I hope that this video gave you a clearer idea about this Brookfield REIT, the assets it contains, and the market outlook towards it right now. Given that markets are volatile and close to all-time highs, REITs such as this one can be seen as slightly safer long-term investments since they are backed by physical assets and underwritten by one of the largest asset management companies in the world. I hope that this video served as a quick introduction to this topic so that you can go out and have a look at these products yourself. Thank you so much for listening, and please do remember to like the video and subscribe to the channel if you enjoyed the content.